Well, hi, I'm Ron Zimmett. I'm a Florida trial lawyer and risk management consultant to Negley Associates for many years. Welcome to the ongoing risk management video tips which Negley Associates is sponsoring for your use. The topic today is buying professional liability insurance. The decision as to which professional liability insurance to buy is far more complicated than most people can appreciate unless they are insurance professionals. Most laymen focus on price in making insurance decisions, but don't look further to determine if one policy is a better value, even if a little more expensive. The specific topic for today's video is 3 critical points to consider when buying professional liability insurance. So, first, what's covered by the policy? A good business just for the insurance company would be to sell policies for a premium less than other companies, collect a lot of money, and then exclude coverage for frequent claims and/or do everything possible not to pay the claims. That maximizes profit for the insurance company, but is obviously not good for the customer. So the first critical point is to compare one policy with another to determine what the differences in coverage may be. This may not be so easy. You should compare the disclosures in the declaration pages for such items as policy limits, deductibles, and who or what organizations are named as insured. You should also look at the policy itself to determine what is in a list of exclusions to coverage. Exclusions to coverage, however, may not be just in the list of exclusions. You should also compare the definition sections of the policies to determine how the different definitions may affect what is covered. If you don't feel comfortable making these comparisons on your own, get help. Insurance brokers may be able to make the comparisons for you, but ask for an explanation of the details. Second, will the insurance company still be in business when it comes time to pay your claim? Professional liability insurance can be a risky business if the company does not have sufficient expertise and experience to handle claims appropriately. Some insurance companies in the mental health field have gone out of business. You may remember, for example, a number of years ago, that Integrity Insurance went out of business and was unable to meet its responsibilities. So, when deciding on a company, ask whether the company has a track record in mental health and a unit dedicated to handling mental health claims. Don't forget that your broker is not the insurance company, but sells policies for the insurance company. Third, will the insurance company have your best interest in mind? The insurance business has a built-in tension between the interests of the insured on the one hand and the company on the other. It's in the interest of the insured for the company to be sure to pay claims within policy limits so that the insured does not have to pay anything out of its own pocket. But it's in the company's interest to pay as little as possible for each claim. A company that has your best interest at heart will be willing to pay claims in a way that puts your interests first so that you're not exposed to the risk of having to pay any amount out of your pocket that might exceed policy limits. So, when deciding on your policy, ask whether the company has a track record of handling claims in a way that puts your interest first. You could, of course, ask your colleagues about their experience with their companies and how their companies have handled claims. So that's a video risk management tip for this month, sponsored by Negley Associates. I'm Ron Zimmett. Thanks for listening.